key markets being Saudi Arabia, Qatar, Egypt, growing presence in the UAE, and a very big growing presence in Africa. I'm very proud to say that some of the largest and more meaningful organizations, processors, some of the large central banks are running on the FIS technologies.
We've all got very familiar with, face-based payments, courtesy our Apples and our Samsungs and so on and so forth. But do you really see biometrics becoming, or contactless using other forms of biometrics becoming a mega trend? So pay by hand, pay by iris, pay by whatever form of your body or not.
My opinion, and this is not to say that this is the opinion of the business, banks really need to make sure that they're harnessing the power of data.
Joining me on the couch is Vikram Suri. Vikram is the managing director for the Middle East, Africa, and Turkey region for FIS. For me, payment orchestration is the ability to bring embedded payments, embedded finance, right? Embedded savings, embedded insurance into the whole offering.
We have a very effective payment system which is designed for corporates. That's something that we do very effectively. And we are also providing treasury solutions for some of the large corporates, which is taken a large part of, we're growing our market share in that area. And we're providing these systems both on-prem and on cloud.
Well, welcome to today's episode of Couchonomics with Arjun. Joining me on the couch is Vikram Suri. Vikram is the managing director for the Middle East, Africa, and Turkey region for FIS. So with that, Vikram, welcome to the couch.
Thank you very much, Arjun. Thanks for having me.
No, it's a pleasure. And thanks for accepting the invitation to come along.
It's always a pleasure to meet you. And then now sharing this couch with you is quite a delight. Thank you very much.
No, I appreciate that. So Vikram, I think it would be very useful for, I guess, the audience that sort of does tune into the show to get to know FIS a little bit better, right? In my words, or in a lot of other people's words, FIS is what I call the first generation of fintechs, right? Who emerged years ago, brought in technology. It was a technology-led, I guess, proposition, which was there to sort of, I guess, drive exponential change across the financial services sector. But enough from me. In your words, please paint us a picture around who is and what is FIS.
Well, I'm glad that you started with FIS being a first-generation fintech. I would probably like to expand on that a little bit more. And we've tried to keep that legacy from not only being meaningful as a fintech, from when FIS was originated back 55 years now, to now where it is a more meaningful fintech in the fast, rapidly growing landscape of technology. As you might know, it is probably the single largest or one of the largest fintechs in the world. Large part of our business comes from North America. Our international business is spread across Latin America, Europe, Middle East, Africa, Asia Pacific, and Australasia and India.
So Antarctica is left then, I guess.
Well, you never know. The pace of technology is taking us everywhere, isn't it?
Yeah.
Soon you will have people sitting in their Eskimos doing digital payments. Who knows?
I'm sure. Sorry.
So FIS has a breadth of offerings, and as many large multinational organizations, has tried to make the journey very meaningful for its clients. We are largely focused around, in this region particularly, banking and financial institutions and large corporates. And I'll be happy to share more about what we are doing in this part of the world.
Okay. So let's then dive into this part of the world, right?
Sure.
So legacy of FIS, predominantly for most people who look at it from outside in, see you guys as a payments player, right? Is that the backbone of the business in this part of the world also?
Well, yes and no.
Okay.
Payments really is the more exciting part of the landscape. But FIS traditionally in this part of the world has been in core banking, in merchant services, and yes, closer to payments in switching and card management systems. And obviously, not to mention fraud. Because as we try and digitalize and open interfaces and make these technologies more and more available to clients, the fraudsters come in.
And how long have you guys been in this region?
It's been more than a decade.
Okay.
We started, actually it's been, our physical presence on the ground has been about 10 to 12 years now, but FIS has been present in the market for even longer than that.
Okay. And your clients are pretty much everybody and anybody?
Well, yes, we have quite an enviable reputation. We've got, our key markets being Saudi Arabia, Qatar, Egypt, growing presence in the UAE, and a very big growing presence in Africa.
Okay.
I'm very, proud to say that some of the largest and more meaningful organizations, processors, some of the large central banks are running on the FIS technologies, and which gives us a very meaningful perspective of what's going on in the payments business.
So let's take it. Thank you for giving me that segue, because what I do want to do is take the discussion to a sort of a level of abstraction where I can extract the payment practitioner out of you, right, rather than the FIS practitioner, right? So payments, as you said, terribly exciting, right? There are more reports than days in a year. That are printed on what's happening on payments. A lot of it is repetitive. I do appreciate it, but a lot of it is actually quite new and quite nuanced to different regions. If we take this macro region, and it's actually quite a large region with quite a lot of, if I may say, dissimilarities or uniqueness, right? Turkey is a different level of maturity to possibly Saudi Arabia, and you talked about Africa, which has completely different challenges to some of the markets. How do you see, what do you see as the big trends that are shaping, I guess, the future of payments in this wider region? I'm happy for you to pick one or two regions if you want to be a little bit more specific, so that we can go into a little bit more detail.
Well, you said in your question Africa, which helps me go back in time. I don't know if you remember when Thomas Bata first went to Africa and said, well, nobody wears shoes. There's no market for shoes. And then he said, can you imagine nobody wears shoes? Can you imagine the market for shoes?
Yeah.
So I think the biggest trend I see is starting with financial inclusion. Mm-hmm. And I think financial inclusion has been talked about more from a perspective of banked versus unbanked, traditionally. I'd like to expand that to a little bit further to say financial inclusion from a perspective of what it means to customers. So let's open this a little bit. Please. From a payments perspective. It's very important that we start to reduce barriers to entry to try and do different things. We start to remove biases by putting in technologies like Gen AI and others. But more importantly, for the clients, it has to be the ease of use. Mm-hmm. If customers have a technology that they can easily use, they will adopt it more and more. For example, if you look at Saudi Vision 2030, or if you look at most of the key economies in the Middle East, they all want to go all digital or go cashless. How do you achieve those trends? To be able to provide infrastructures that would support to get to those points, right? And obviously, people have to feel safe and secure. You are not going to use a different payment method if you potentially know that there are challenges. I still, when we're going out to dinner and I take out my phone to pay a bill, and I still see some of my friends pulling out cards, and I look at them wondering, well, why is it that someone in this day and age still does that? And it's basically coming down to ease of use or the fact that, people need to be educated. Sorry, I'll give you another example. My mom, right? I remember 10 years back, I sent her a computer, which she didn't open for 4 months. And now she does digital online trading.
Okay.
So, the benefits have to be clearly articulated, and the ease of use has to become more and more prevalent. And that is one key trend that I see across building more.
And I totally agree. And I think if I may add to it, I actually see the payments being the arrowhead of the whole financial inclusion initiative, because I think the first wave of including someone into the so-called digital financial world is usually through payments, right? If you can get them familiar with payments, other products actually move on. And we've seen that, right? We've seen that in India through UPI. We've seen it through Pix in Brazil. We've seen it through M-Pesa in parts of Africa and similar mobile money. So I totally appreciate it. I think financial inclusion, and it'll stay a key sort of trigger of change. Agreed. But what else?
Well, the other thing is everything is now becoming easy to use and instant.
Okay.
Let's go back 4 years, the year of COVID that changed the world, right? Which probably led to the initiation of aggregators. How often would you shop for a grocery, for example, right? It would probably be once a week, once a fortnight, once a month, depending on your buying patterns. But now, with digital payments and aggregators becoming more and more available and instant, it's probably twice a day. And buying one piece of grocery from one store and one from another.
Fair enough, yeah.
But that's besides the point. Then you never look at your credit card bill.
The bills are going up. Don't even get there. Don't get me started. That annoys me no end, but that's all right.
But the question is, the fact that it is available, the fact that you could order something and can be delivered to you in minutes, is driving more and more consumer behavior. And that being another trend is the predictability of payments. When you make a payment, and now I'm probably shifting a little bit from the consumer side to more the business side of things. The predictability and the cost associated with any payment is probably going to be the cornerstone of how payments can be delivered quickly and faster. And obviously surrounding this is the entire security and the KYC wrap.
So Vikram, I get that, right? So instant commerce or Q-commerce, that this availability of being able to use the aggregators to make a payment and the dependability of payment that it'll go through has completely changed consumerism. I totally agree. Yeah. Let me add another angle to it, right? Another trend which we are seeing globally emerge quite rapidly is everything around faster payments, right? Or instant payments. And in a number of markets, they are being driven by regulatory bodies, or if I may call quasi-government bodies, public payment infrastructure companies, because it's a part of, as you said, part of the whole overall financial inclusion initiative. It is also about bringing down the cost of payment acceptance lower, so that more people can participate. Do you see those trends capture serious market shares in the B2C segment in markets like the GCC?
100%. I don't think that this is a trend that can be averted whatsoever. The reason being, when you look at a closed user group, you are not only reducing the cost, you're also reducing the reliability on other third-party players who are incumbents or prerequisites for those payments to go through. Depending on the relationships that are formed between different governments and political entities, as we see these trends emerge, the closed user groups will also become closely knitted cross-border communities. And these cross-border communities would become very, very important to reduce the interchange rates, as well as the robustness of doing business with each other.
No, I agree. I think I don't know if you're familiar with this project called Project Nexus, which is a BIS initiative with Monetary Authority of Singapore, where the whole, if I may say, and I'm paraphrasing and I'm summarizing the project, is about creating connectivity between the 50 or 60 so-called public infrastructure players, the UPIs, the PIXs. We have our versions with Saudi Payments, I think Saria, and so on and so forth. It is. And I personally think from a technology provider, you guys, to a large extent, are agnostic, because you're going to provide the technology to make this happen, right? So it's fine. But I do think that it does create certain existential challenges for the historical providers of these cross-border sort of payment mechanisms. Because to be honest with you, cross-border mechanism payments is slow, is still very expensive, it's not incredibly dependable, right? And seems to be a topic that everybody wants to talk about, but the solutions have not been that fast to come on, right? We still have issues with fragmentation, we have issues with messaging, we have issues with interoperability, right? So in any case, how much work does FIS do in cross-border?
Well, we do a fair amount of cross-border work, but that being said, it is more specific to individual governments.
Okay.
We are not an interchange, and therefore, when we do work related to cross-border, we would set up the technology for that specific country and not across borders. We do have the technology, It has been used widely in Europe and many other places. We're yet to do a large cross-border solution for our clients in the Middle East. So yes, we do have the technology, but we are restricted to working with the technologies or with the governments within our geographies.
Okay, so let's talk a little bit about your customers. Let's talk about large banks, right?
Yeah.
Over the last, especially in the region, over the last sort of 5 to 7 years, we started seeing, actually longer, right? We started seeing some of the larger banks spinning off their payments businesses, right? Either as completely separate entities, right, or as separate SBUs within their businesses, and sort of in a way separating the technology stack, the governance of these businesses, and so on and so forth. Questions for you is, one, do you continue to see that trend carrying on, and do you see certain consolidation happening in that specific sector, right? And for those who are actually doing this, right, but at the same time who are experiencing cost pressures, right, how do you see the dynamics play out? So what are your clients talking to you mostly about?
Well, it's many questions rolled into one. So I'll try and unpack it a little bit. So let's look at the banks and which kind of banks are spinning off separate payment organizations within the bank as a separate entity. But before we come to banks, let's come to large financial institutions and central banks. Some of the central banks, what they've done is that they have spun off the payments orchestration or the payments responsibility out as a separate company. We've seen that with Saudi Payments, Al-Ittihad, and so on and so forth. For banks, they invest so much of time and energy in putting together or solving their own payment problems that they believe that this prototype that has been developed can serve other banks, and therefore is a separate business of its own. Therein lies the dichotomy. Is a banking operation or a payments operation core to banks' key strengths? Are they a software business or they are not? I see that while they embark on this journey, their more important journey is to protect their turf in trying to increase their deposits or to be more meaningful to their clients. Their responsibility of behaving like a fintech or partnering with fintechs is probably the more rewarding preposition, as opposed to governing a body which is now being set up to orchestrate payments for the bank and for other similar financial institutions. Also, the change that their clients are expecting from them quite rapidly cannot be governed by just this payment entity. So as a trend, to answer your question, I see that the banks see initial value in running it as a separate operation, but eventually they will try and outsource it to experts like FIS, or they would try and feed off the trends of putting it in the cloud or using more, technologies like Gen AI and the others to make that more meaningful for the bank. The second trend that I am seeing is that they will walk away from making this a big monolithical structure to making it into small, bite-sized, composable projects which can generate revenue for the bank. If you look at today a core banking upgrade for a bank, banks are no longer, not no longer, but they are very thoughtful of doing a large heart transplant.
Agreed. Yeah.
They want to enable more and more microservices that can generate revenue. And if you talk to any, CEO, or I'm sure you speak to a lot of these guys on your couch, but they're either interested in increasing their revenues, decreasing costs, or working with compliance. Outside of these three priorities, if it's not going to drive and increase deposits, or to make the customer experience more innovative, it becomes a more administrative exercise rather than an inclusive one.
So I get it. I totally agree. But let me put some challenge back in, right? So we started seeing this trend where payment units were being spun off, and largely they were payment units servicing the B2C payment category. So let's not even talk B2B, because B2B payments is 20 times the size of the B2C payments. We'll focus on it. But we also saw another interesting trend emerging, or two other interesting trends emerging. One was the fact that the margin on payments and payment processing is been heading in the wrong direction, right? Because it's getting more competitive. There's better technology out there. Things are getting more efficient and effective. And the other thing was that payments by itself does not yield that much upside, right? It needs to be wrapped with other financial products. You talked savings or deposits. I talked about lending. For example, I'll use BNPL. For some people, BNPL is a payments product. For some, it's a lending product. But it lends very well to the payments business, right? So here's the dichotomy I see for the banks, or here's the challenge I see for the banks. You spin off a separate business, try and create this independent payments processing business, acceptance or whatever, issuing. But at the same time, this business needs the bank for all the real value-added products, which is where the value is going to be generated, which is the lending and the saving products. So how do you actually manage that? Now, I'm not expecting an answer from you. I'm just saying that to me, this trend has a degree of incompleteness, right? In the sense, how do you take it to completeness? Because if they spin these businesses off entirely separately, I think makes sense for them to actually outsource this entirely to fintechs like you to run it.
Correct.
Right? Because at the end of the day, it's become a pure technology play, right? And yes, you can put a customer layer. There has to be some interconnectivity. Also, as you go into payments, there's a level of open architecture which needs to come in, right? So you cannot be, if I say, beholden to a single bank, right? Because at the end of the day, as a customer, I want choice. Right, so I can't be beholden to a single bank. In any case, that's an interesting trend. Let me come to another interesting trend, and I think this would be relevant and interesting from a FIS perspective. How do you see the take up of biometrics? So obviously, we've all got very familiar with face-based payments, courtesy our Apples and our Samsungs and so on and so forth. But do you really see biometrics becoming, or contactless using other forms of biometrics becoming a mega trend? So pay by hand, pay by iris, pay by whatever form of your body or not. And what are the implications of that from a technology perspective to you guys? Because that creates cyber challenges, fraud, comes with a whole host of I guess baggage with it.
Well, before I answer your question on biometrics, and I'll come to that, you made many comments about the payment infrastructure being away from the bank a little bit. I'd like to make some comments on that before I come to biometrics. Ahead. So essentially, your view of, or the view that you presented about the bank outsourcing their payment infrastructure, I'm looking at it from a slightly different perspective, from an infrastructure service provider perspective. Is that banks really need to make sure that they're harnessing the power of data. Without naming specific banks, there are banks that have made acquisitions of organizations that can completely change their digital front end, thereby providing a very unique customer experience, hopefully improving the image of a bank from being a large monolithical, archaic system to a new age, intuitive, touch and feel experience. Whilst they have done that, and they've been able to successfully acquire a lot of good talent, what they've not been able to do is to integrate this talent into how it talks to the core system and how it feeds off the core system. That's exactly what you said. Coming back to biometrics as a trend, yes, the technologies are emerging, but given the false positives that we see, or depending on how secure you want your infrastructure to be, it still has challenges around customer education, around 2 or 3 factor authentication, depending on what you know, what you have, what you are, so on and so forth. But we have seen that biometrics alone is not a good enough trend. It will, given the challenges that we have in the area of security, it will be at least 2 or 3 factor authentication. To give you an example, when you have a security incident, right? And I spent many years of my life working in the security business. When you have a security incident, what do? And this is about, real-time payments, or it's about a user experience, right? Because customer loyalty in Gen Z or Gen X, whichever way you want to call it, is very low. If the user experience doesn't come right, people may or may not come back to that payment trend. So what happens when a security incident happens, and how do you lay down those rules? For example, if a firewall fails, do you fail open or do you fail safe? Meaning, fail open meaning, do you let all the traffic go in, or fail safe, you shut everything down? So depending on whatever rule engines you have put in the back end, biometrics on trends like these will have to be very carefully be put in place, and those rules have to be educated to their clients. Without naming specific banks or central banks, I had a conversation with the head of retail of a bank, and he said, well, Vikram, I've just been slapped with a penalty for my client entering a PIN number wrong for the third time, and I'm being told that I must educate my clients to enter their PIN number correctly. Now extrapolate that to what you asked me about biometrics. Imagine if a person can't get through for a type 1 or type 2 error, the frustration around a payment not being made.
So, but Vikram, let me pose the question then, right? So payment practitioners everywhere in the world talk about, we want to make payments invisible, okay? But at the same time, as you said very correctly, fraud is on the rise. Security breaches are on the rise, right? You want to create greater number of authentications, right? They don't tend to be they don't sound like they're part of the same story, right? Because all I can, as my simple brain says, well, it's going to make things slower. It's going to make things more visible. It's going to actually reduce your authorization rates, right? Yeah. Because that's kind of the outcome. So how's this trade-off going to be, I guess, be signed off? And then what role is FIS playing in all of this?
Well, we play a very key role in this, right, because we have recognized that, what you call as zero-day threats, or the technologies which were there put in place to manage threats which were known threats, or they had a certain pattern. They came through with attacking a range of IPs, or they had certain attack methodologies, have changed. And therefore, technology has to upgrade itself very quickly. We're very fortunate that at FIS, we are doing a very good job in not only addressing the technology, but, the good old the triad of people, process, technology. Tech is one part of it. We are also advising financial institutions and central banks around the process, and obviously having key talent in region. I think the biggest denominator these days is to find and retain the best talent in the industry.
Okay.
Because this talent is not only, they don't only act as subject matter experts to set up the success for a client experience, but also do a key job in educating the clients who can then educate their customers about what to expect.
Okay. So let me pose a couple of sort of, I guess, interesting questions, which I'm sure everybody in the audience wants to know, right? You've been in the business for 50 years. You've obviously been, as not you, well, I'm sure you've been there, but not 50 years, not that old. But FIS has been in the business for over 50 years, right? And it's global. It's worked in a number of markets. It's learned. There's a great platform in which you guys innovate at a global level, at a national level, at a domestic level, right? Two big questions. A, how do you guys keep yourself ahead of the curve in terms of constantly reinventing and innovating yourself, right? Because you could fall prey to some of the same challenges some of your customers might fall prey to, which is the legacy mindset, legacy technology, so on and so forth, right? Because unfortunately, legacy is just another word for time, right? The second issue is that a lot of your, if I may say, more fleet-footed competitors, right? What I call the new generation of competitors, who were initially playing in the edges, right, are increasingly getting into the core, right? And what I mean by saying the core is they're basically saying, hey, you can use us instead of FIS. It's not just use us in addition to FIS, right? Two-part questions. I think they're related. How are you guys tackling these, I guess, challenges every day?
So, Arjun, first and foremost, goes back to how we started this discussion, right? We're the first generation fintech. People rely a lot on us for trust. It's a very big word for us. Therefore, if money is riding on a network, it needs to be blessed by a lot of scenarios, repetition, a a lot of experience. That's what we bring to the table. There are many new technologies that emerge. We are constantly, both at a global level and also at a local level, in touch with our community. We make investments, we have different programs where we are educating fintechs, we are bringing them to our centers in North America, where we are being sometimes angel investors, seed investors in their businesses. And obviously, it's no secret that cooperation and competition is a trend that all players typically follow, and we are not different than the others. But more importantly, at a local level, we are not only presenting to clients a technology which we believe will work globally, but has to make sense to them at a very local level.
Yeah, and that's how I was going to come to it. It's one thing to say that, the US does it. How do you localize it here?
How we localize it here is, if a customer is looking for a bouquet, you just can't give him some roses and say, thank you very much, this is how we'll fix your problems. And in doing so, we have built some very key relationships, both with fintechs and with point technology providers, and we bring them in as a solution offering for our clients. We have seen that is very meaningful for our clients. And when it is blessed with the responsibility and project management of FIS expertise, the clients have a lot of faith in our ability to execute. So trust is a very, very big element. The second thing is scale. If you look at our switch capability, we have been able to make that switch active or geo-dispersed active, which means one switch can probably then be investment protected to provide 4 switches. So imagine in a scenario of growing digital payments across, the clients have a seamless experience, right? They have a trustworthy technology and it is absolutely scalable. And last but not the least is security. We have not only a very evolved, very proliferant, well-executed, well-implemented solution, but this is an area which clients are very, very keen to know more of, because we don't know what's coming next, and which is the segue to us getting into the evolution of new technologies. If it is new, if it is noteworthy and it is adding value to a client's business, whether it's local or it's global, we try to take what we call the glocal approach. While it's global, but how do we make sure that it works locally for our clients? Our experience has been, whilst clients appreciate the fact that it is a solution that has worked for clients internationally, the connectors to the central bank, the regulation that it requires, we've been able to do that successfully, working alongside both with our technology partners and implementation partners in region.
Okay, so you used the word cooperation, interesting word. You also talked about localizing it. So 2 straight questions. Do you guys actually partner with fintechs, paytechs, which are local and regional, or all of that usually comes from the mothership back in the US?
We partner with fintechs locally, and I encourage to anybody listening to this podcast to come and speak to us. We are very interested in knowing what is what we would widely known as the end-to-end or E2E customer experience. If it adds value to our clients or to the clients of our clients, then it's a meaningful discussion to have with us.
Yep.
Not to mention it needs to be regulated, not to mention that it should be auditable, not to mention that it should be reliable.
Okay. So begs a very interesting question, because I think you just created an excellent segue into this, right? So one key trend that I'm actually seeing, it's been a trend that has been for years, but I for some bizarre reason, the last 6 months is getting a lot more attention, is around payment orchestration, right? And this is payment orchestration from a perspective of how large merchants can orchestrate payments. And a lot of people traditionally used to think payment orchestration is all about smart routing, right? which is not what I'm talking about. For me, payment orchestration is the ability to bring embedded payments, embedded finance, right? Embedded savings, embedded insurance into the whole offering. From an FIS perspective, is your strategy to say, embedded orchestration, orchestration is the responsibility of the client and we'll plug and play wherever we can? Or are you now building in, right, a plethora of microservices which takes you beyond just payments so that you could go to a large, as you said, aggregator and say, by the way, not only can I process payments for you, but I can process a whole host of financial transactions for you? Or is that something you guys are not doing? Because some of your other competitors, if I may call the Gen 2, the Gen 3 fintechs in the payment space, are starting to do this as an offering. Is that something FIS is looking to do? You don't have to answer the question. I'm sorry if it's very strategically sensitive.
Some of the content is strategically sensitive, but I will answer to the extent that I can.
Sure.
Our focus is to provide the infrastructure for payment orchestration.
Yep.
Therefore, today, if a large financial institution would like to automate payments at large, we would set up the entire payment orchestration from A to Z, which means we would set up what we call traditionally a payment hub. And this payment hub would automate, modernize, and build a future-proof, if you may like, for the lack of a better word, payment orchestrating engine. So that's one part of it. The ability to set up a similar infrastructure for merchants at large or organizations at large, again, it is a conversation to the extent of what is the end goal of that entity, right? So let me explain that a little bit further. There are a few things in the pipeline which, unfortunately, I can't speak to at the moment. But yes, we today are in that space to be able to provide that capability. What we have in terms of capability or as alliances or with partners, we cannot take everything to market till such time we are not 100% convinced. Because as I said earlier in the segment, that trust is very key for us. And, we have the enviable reputation of a client never leaving FIS. So, and, touch wood, when we get into a customer, not only customer experience is absolutely the key to our discussion and experience, but more often than not, we try and build more and more solutions around that key client that we acquire.
Okay, interesting.
So, for example, a client would initially probably start with a switching solution or build a card management solution, and then we'd probably provide them a totally integrated system that would do switching, card management, chargeback, reconciliation, all rolled up into one system for the client. This reduces the number of vendors they have to manage, the risk associated by working with different vendors at the time of a crisis, and scalability, as I mentioned. I mean, we are seeing now new trends or new records being set up on the amount of data that some of these switches are generating. In fact, some of the steering meetings are around what really is the limit of the technology in terms of transactions. And frankly speaking, it's none. It's back to the hardware.
No, I agree. So it's very interesting you say that. And again, I'm not expecting an answer. It's just more of a comment, right? So for a lot of us folks, what we've seen over the last sort of decade is, a lot of the infrastructure in the financial services world was monolithic, right? Which is not a negative word. It was built in a particular manner. We went through this unbundling of financial services, right? Or some people call it as atomization of financial services, which I think you did very well, where you said there's switching, there's card management, there's fraud management, there's smart routing, so on and so forth. And a lot of the customers started saying, no, I want to work with the best in breed provider for these individual services, right? We're now starting to see an element of the rebundling starting to take place. But the one distinct difference that I am seeing in some of the rebundling, even in the region, is that while there is someone who's rebundling it, not every service in there is provided by the person or the organization which is rebundling.
Yeah.
So they are working with maybe a best-in-class fraud provider, right? Which could not be an FIS company, for example. Are you guys taking a similar approach, or are you guys saying, no, these are all business lines, which are obviously different P&Ls by themselves because they could be a single product sale, fraud could be by itself, chargeback could be. And so therefore we're going to bring it together. Or are you actually opening it up and saying, no, we're going to have certain services, but we're also going to bring third-party players who we trust, who can live up to our expectations, scale, size, so on, the regulatory requirements. So where, especially from a local market perspective, where are you guys on it?
So Arjun, I think the jury is out on best of breed versus best of class, right? And as long as it's best of class, people believe that it is a technology, if it's implemented well, being best of class would work for a customer. We don't stop there. In all cases, we can't always have best of breed, but we do enough background checks. Not only, if it's not best of breed, it should have the right capability of implementation. It should have the right customer experience. And for it to grow into becoming a best of breed in the future. So that's the first part. Second part is, yes, we are providing, in my terminology, a bouquet to the client, which is a combination of best of breed, best of class products for the customer, but ensure that we have access to code. Most clients, if they're putting a mission critical system in, would need to know, if they have escrow, or, who's going to be doing the work, or are there enough subject matter experts available? The fact that we've not had failed installations, we don't have disgruntled customers in region, the fact that we are growing by reference is all a testimony of the fact that we are bringing to the market meaningful solutions that make the client more progressive compared to their competitors.
And you're able to stitch things together.
We are able to stitch things together.
Okay.
And clients are wanting to expose more and more APIs to their clients. And as a result, each one of these becomes a business case by itself. We are focusing on ensuring that we provide, so far, to call it the plumbing, and that plumbing to be effective for the client to execute on their vision.
So this is very interesting. You talk about the customers to customers. When you started, you said you're servicing banks, financial institutions, and large corporates.
Correct.
Let's briefly talk about large corporates or corporations, right? What sort of business need are you servicing there, right? And how does that fit in with what you're trying to do with their providers, which are banks and financial institutions? It's a dance, right?
Well, let's take the segue back into payments. A large part of our corporates are also looking for automated payment systems. And we have, without getting into products, we have a very effective payment system which is designed for corporates. So that's something that we do very effectively. And we are also providing treasury solutions for some of the large corporates, which is, taken a large part of, we are growing our market share in that area. And we are providing these systems both on-prem and on cloud.
Okay.
So that's a big growing trend for us.
And do you do this in partnership with the banks, or you're agnostic with the banks and the financial institutions?
We're agnostic.
You're completely agnostic. So you're working for them. You're saying, here's something which you're getting, how you actually connect with your banks and financial institutions doesn't make a difference, because your open architecture, you can actually connect with them.
Absolutely.
Right. Cool. I'm conscious of time. Last couple of questions. One, we there's so much interesting technology out there, right? From an FIS perspective, regional context or global context, and you can't use AI, right? What technologies do you believe are actually going to be terribly exciting for the whole payment sector, and are going to actually define what the future of payments will look like? Where's your crystal ball on this?
So before I answer that question, there are a few trends that I personally follow. They are in the area of security, cloud infrastructure, devices at large on how people connect with their infrastructure, and a few others. But without getting into the trends I follow, I think cloud is a very, very interesting area which has not yet realized its potential.
Agreed.
So, a lot of people talk about AI, and we said we are not going to talk about AI, but just coming back to the basis of AI is basically machine learning. So if you unpack that, you're looking at different signaling protocols being put together in an incident manager to come up to make sense to what you want to do. But cloud would probably be a big game changer because of the ability, the speed, the agility with which you can provide the solutions. The fact that it will be secure, the fact that it is elastic and scalable, and the fact that it would be made available very quickly will give organizations the ability to quickly change things in the back end to respond to what their clients are looking for. We still have data residency boundaries across some of the countries, which is a bit restrictive, and therefore local cloud is an absolute necessity for some of the large banks and financial institutions. And what we've also seen is that public cloud versus private cloud conversations are still evolving based on a few parameters. One, the jury on how secure these infrastructures are.
And that's
is
my
not
question,
in public
right?
domain.
Unfortunately, with cloud, the cybersecurity conversation comes hand in glove, right?
Absolutely. And then the second thing is, the geopolitical situation, the way it is, the emergence of cloud would mean that the owners or the regulators of that tech or that infrastructure will have to be local eventually.
I'm going to ask you a question. I'm not quite sure whether you'll be able to answer that, but we haven't touched the C word in this conversation, which is, what's your take on the emergence of crypto, digital assets, right, and the influence they're going to actually have on payments?
Well, I still feel it's not very regulated. And depending on what kind of challenges you're trying to resolve, it will have its own play out, for us to speak.
So what about your view on CBDCs, for example, or stable coins? So CBDCs will be a highly regulated cryptocurrency, if I may say so. It's an antithesis to something which is decentralized because it's entirely centralized. But do you really see CBDCs, both wholesale and retail, gain traction very quickly in the near term? And is that something which FIS will have to respond to very, very quickly, especially with programs like mBridge and others, which a number of central banks is participating in? And the other part being, the growth in stablecoins. Stablecoins are actually growing in use quite rapidly. I know mostly in the cross-border payment side, right? Or one area is cross-border payment side, but there are other categories too. What's FIS's company line on this? I know you're an infrastructure provider. Your answer will be fine if that's the form factor of payment. We'll provide the infrastructure. But do you guys see this as something happening now?
So first and foremost, FIS is very well entrenched in this area. We are doing a lot of research and work. In fact, we have set up a platform. It's called the DRM platform. I don't want to get into it too much for now. That platform is currently available. We are watching this trend from a distance at the moment. Yes, CBDC will be a reality, and it is a reality as it's emerging, as you rightly said. I think the speed of acceptance is the question. How soon will these become mainstream is the trend that we are watching from a distance. My opinion, and this is not to say that this is the opinion of the business, is that it would take a while before they would come to fore.
No, I totally agree with you. I personally
they will take a while, and it will take a while for them before they can become meaningful for someone to build an infrastructure to support the ask coming from these different coins or different cryptocurrencies. So, for example, today the payment hub technologies that we have support these assets.
Yeah. I
So
can imagine.
we have the infrastructure today to support the ask coming from this side of the industry.
Yeah, I think my 2 cents worth, for whatever it's worth, is I think wholesale CBDCs, I think, have a use case. I think governments will use it. I personally think some of the testing which is going around and experiments which are going around will translate, specifically with countries which have mutually beneficial relationships, right? I think they will test and progress. I think the jury is still out on retail CBDCs. I sometimes still struggle with, is there a need? Because there are other forms which can achieve the whole thing. But let's see. I personally think this is an area in payments where I think there'll be some very, very interesting developments which will happen in the.
I'm sure, Arjun, the regulation around this has to trickle down at the consumer level for the ease of use and more proliferant. Till such time that use case is not very obvious, the adoption of technology, and going back to what I was saying earlier in terms of financial inclusion, the inclusion of CBDC or cryptocurrencies into the normal man's life will only come if the use cases are out there to see.
I agree with that. So Vikram, I'm conscious we've gone well over the 45 minutes. I appreciate you coming in. It is Friday evening, so I'd let you to I'll leave you to get back to your family. Thanks for coming in.
Thank you very much for having me on the show. Thanks, Arjun.
So ladies and gentlemen, that was Vikram Suri, Managing Director of FIS. He runs the Middle East, Africa, and the Turkey region. I was able to get him to squeeze out some of the trade secrets. Well, I'm joking about that. But look them up. And actually, he did make a call out to any fintechs, right, which are in the space of either joining to payments or in the payment space. Reach out to him or his team and see if there is opportunity that you could do something with FIS. One thing is very clear, that they are omnipresent in this region. They pretty much work with every regulator and all the large banks. I know that for a fact because I tend to work with most of those people most of those people too. So with that, goodbye, and I'll see you next week. Bye.